Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is August 16th, 2025. I am Luna.
I am JP Morgan. So equities are pausing near record highs, but you've also got these underlying economic concerns, geopolitical shifts. It's quite a complex picture right now. We need to unpack that tension.
Absolutely. Okay, so let's dive into what's been moving things. Market recap. U.S. equities, well, they finished mixed. The S&P 500 and the Nasdaq, they slipped back a bit. It seems like mostly profit-taking in tech after that incredible run they've had.
Yeah, it makes sense.
But interestingly, the Dow actually edged higher. Looks like investors were rotating into what some call those defensive names.
Right, companies that tend to hold up better when things slow down. Exactly. Meanwhile, Treasury yields climbed. The 10-year hit multi-month highs near 4.33%.
And that's significant. It really dialed back those hopes for immediate Fed rate cuts, didn't it?
Totally. Makes borrowing more expensive. And the U.S. dollar, surprisingly perhaps, was hovering near its weakest levels in, over 2 years?
Yeah, quite weak. But the real headline grabber.
Oh, yeah. Crypto, Bitcoin just rocketed. All-time high above $124,000.
I mean, truly fascinating. And what's interesting there, it wasn't just about the weaker dollar.
Yeah.
I think it's a pretty stark signal that investors are seriously looking for any alternative, really, to hedge against inflation, even in, highly volatile crypto. Suggests a real deep-seated concern about traditional assets maybe losing value.
That is a powerful signal. Okay, speaking of concerns, let's switch to the economic data. The numbers paint a real paradox, don't they?
They absolutely do. Take July's retail sales. They rose a steady 0.5% month over month, confirms consumers are still spending.
Which sounds good on the surface.
Right, but that resilience is actually making the Federal Reserve more cautious about cutting rates. It hints inflation might be stickier than they hoped.
Okay, so spending's up, but
then you contrast that with the preliminary consumer sentiment for August. It plummeted sharply, down to 58.6, a 6-month low. And crucially, inside that report, short-term inflation expectations jumped to 4.9%.
Wow. So people are spending, but feeling worse and expecting higher prices.
Exactly. Which raises this important question. Could we be sort of heading into maybe a stagflation late scenario?
You mean that tricky mix of higher prices and slower growth?
Potentially, maybe not as severe as, historical periods, but that kind of pressure.
That disconnect is definitely unsettling. So how do these domestic signals then ripple out globally? What about trade and alliances?
Well, that's where the plot thickens, really. Governments are actively reshaping trade and supply chains. President Trump announced new tariffs on imported steel, semiconductor chips.
Aiming for make it in America, but raising inflation worries for businesses.
Undeniably raises costs for businesses using those imports. And on the Fed front, okay, markets are still pricing in maybe 2 rate cuts by year end, but you have Chicago Fed's Austin Goolsbee saying, look, he needs more assurance. Inflation is cooling before he'll support cuts.
Right, which makes that upcoming Jackson Hole Symposium even more critical for signal.
Absolutely, everyone will be watching that.
And beyond the U.S., how are other big players responding to this more protectionist vibe?
Well, connecting it to that bigger picture, you see countries actively recalibrating trade. In India, PM Modi is pushing self-reliance GST cuts, partly in response to U.S. tariffs. Meanwhile, over in Brazil, President Lula is embracing Chinese EV investment while openly criticizing U.S. protectionism.
This is a subtle shift in partnerships.
Yeah.
Diversification.
Exactly. It's a clear trend.
Yeah.
And it has direct implications, for industry costs, investment flows, even the longer-term economic stability.
Okay, so with all these moving parts,
Yeah.
What should you be watching for right now, looking ahead? The next day or two are light on U.S. data.
Right, but global data is key.
Yeah, China's industrial production and retail sales for July are due Sunday night. That'll likely set the tone for commodities and, risk appetite globally.
Definitely one to watch.
Then, one day, we get the U.S. NAHB housing market index for August. Gives us clues on home builder confidence, how rate-sensitive sectors are doing. So you should probably be prepared for some potential volatility driven by that China data or any unscheduled geopolitical news.
What we're really seeing is this nuanced battle, isn't it? Economic resilience pushing against inflationary pressures. And it's all complicated by these protectionist trade moves and geopolitical flashpoints.
So here's the lingering question for you. Will the Fed's caution, combined with these ongoing trade tensions, finally deflate the market's optimism? Or can central banks somehow find a way to thread that needle without causing a major jolt? Something to keep a deep dive on as the week unfolds. You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai. Know what moves your money.